Hello, everyone. I'm excited to share with you the latest developments surrounding Tesla, a company that has been making waves in the automotive industry for quite some time. As a long term supporter of the company, I believe that Tesla's shares are undervalued and that owning Tesla stock requires a special combination of great imagination and, most importantly, patience. But first, make sure to subscribe to Wall Street Games. If you haven't already, now is the perfect time to do so. You can also give this video a huge thumbs up by clicking the button above. Long-term investors may find it easier to endure the roller coaster ride that comes with investing in Tesla, despite the company's volatility. Although sales and delivery figures for Tesla have not been steady, there's no doubt that interesting things are happening, and the company will likely show consistent growth with its car production. The amount of cars that Tesla can deliver has been used by a lot of investors and experts to anticipate the company's future, and once more, analysts are beginning to project that Tesla will be the year's biggest deliverer. Some of the top analysts in the business presently rate Tesla stock as a strong buy, as the company recently reported record quarterly vehicle deliveries, which is fantastic news, but quarter-over-quarter sales growth was only moderate despite price. The car company's cuts in a number of markets due to increased competition and indirect economic output. Tesla lowered the price of several of its vehicles. In late 2022, the company did the same for its Model 3 and Model I vehicles in Australia, France, Germany, the Netherlands, and Norway. Switzerland and the United Kingdom became less expensive, allowing more people to purchase Tesla cars. Recently, Tesla's decision to cut prices has been backed by numerous engineering innovations that allowed the company to reduce the cost of production, according to Grace Tao, Tesla's vice president for external relations in China. The company is responding to the country's call for practical actions to promote economic development and release the potential of domestic demand. This move is in line with Tesla's long-term strategy of expanding its reach in the Chinese market, which is one of the largest markets for electric vehicles globally. Despite the positive response from Tesla's leadership, some analysts claim that the price cuts did not yield the expected results, while many expected that these price cuts would result in enormous demand for Tesla. That does not seem to be the case. However, it's important to note that the success of any price cut strategy depends on several factors, including market conditions, consumer behavior, and competition. Notwithstanding the conflicting responses to its most recent price reductions, Tesla is still dedicated to its goal of speeding up the global switch to sustainable energy engineering innovations and growing its global presence. According to definitive data, its prominent position in the electric vehicle market. Let's take a closer look at the numbers. In the first 3 months of this year, Tesla delivered 422,875 vehicles, up 4 from the previous quarter and 36 from a year earlier. When comparing first quarter deliveries to analyst forecasts, Tesla delivered 430 vehicles. Despite this Tesla bull run, other data indicates that Wall Street was expecting Tesla to post deliveries of about 432,000 cars for the quarter. Tesla beat Wall Street expectations with its 422,875 vehicles delivered in the first quarter of the year. In addition, Tesla delivered 6 more of its mainstay Model 3 and Model I vehicles than in the previous quarter, but the number of deliveries for its more expensive Model X and Model S vehicles fell by 38. Gary Black of Tesla said that the company disclosed that a consensus of more than 20 analysts called for 421,500 vehicles delivered. It's also important to note that during the first 3 months of the year, Tesla manufactured 440,808 cars, more cars than it received. All things considered, this indicates that the automaker is still pushing the boundaries of innovation in the automotive sector, even though there are still obstacles to be overcome. Tesla has been very busy recovering from the lockdown that occurred in China and increasing production at new factories in Texas and Berlin. The automaker just tweeted that it is a Texas factory, constructed 4,000 models in a single week, and despite alleged delivery delays, its German facility was churning out 4,000 automobiles every week. CFA Analysis recently, Garrett Nelson raised his price target for Tesla shares from $250 to $275 and upgraded it to a strong buy recommendation. Nelson, however, reiterates his strong buy rating for Tesla, saying the company has a lot going for it. After Tesla's delivery report, Citigroup analyst Etai Masiele stated he anticipates a minor decline in the company's shares. The increasing gap between deliveries and production will probably keep attention on additional pricing codes in Q2, and Tesla shares could, with a softer mix and lingering inventories, retreat marginally and view Q1 deliveries as an inline result. As of right now, investors and analysts are mostly concerned about Tesla's earnings report from the first quarter of 2021. The company made $53.08 billion in sales revenue, up from $31.05 billion in 2020, thanks to a surge in sales of 70.64%. VW is now the second largest electric vehicle producer in terms of market share and revenue after Tesla. Tesla has delivered over 4 million vehicles as of today, but the automaker faces several near-term headwinds, including persistently high inflation and impending economic slowdown, and the ongoing global chip shortage and various supply chain issues. Despite these challenges, Tesla reported its fourth quarter earnings on January 25, 2023, beating on both earnings and revenue. The car company reported automotive revenue of $21.3 billion in the quarter, representing 33% growth year over year. In 2022, Tesla shipped 1,331,851 automobiles to customers worldwide, up 40% from the previous year and 40% higher than in 2021. Although Tesla's delivery statistics were impressive, other manufacturers revealed their lowest sales figures in 10 years. It is unclear, though, whether this year will see improved sales for Tesla in 2022. Tesla increased the size of its overseas facilities, adding the recently constructed factory in Berlin and Germany. By March of that year, the factory began producing the first Tesla vehicles. Elon Musk, the CEO of Tesla, intends to transform Giga Berlin into a European jewel. According to Gene Munster, managing partner at Deepwater Asset Management, Tesla installed the capacity across all of its factories to produce 100,000 Model S and X vehicles per year, along with 1.8 million Model I and Model 3 vehicles annually during 2022. The factory in China was also updated to manufacture up to 750 Zero Model 3 and a Model I electric cars annually. Due to recent price cuts, there is still more downside for Tesla stock, and investors should brace for a 25% decline in future earnings. Although he has long-term belief in Tesla and believes the stock is cheap, he is still apprehensive in the short term because of the pressure on earnings from some of the discounting that has occurred. Addressing Tesla's price reductions, although Tesla's delivery rate showed an acceleration, did not accelerate to the level that would have suggested it would. Nevertheless, Gene Munster stated that the company would have been very ugly had Tesla not implemented price reductions. The founder of Loop Ventures is still optimistic about the company and believes there are a few solid reasons to own Tesla stock in 2023. The largest challenge for Tesla has always been its valuation, but as the automaker's profits and sales soar, it is evident that a company can eventually rise to a high venture evaluation. At the start of the year, Tesla had an earnings ratio of under 30, a sales ratio of under 5, and a price to free cash flow ratio of under 50. Even if Tesla stock isn't as cheap as it was at the beginning of the year, its valuation isn't unrealistic if the firm can continue growing at breakneck pace. Since then, all three measures have increased along with the stock price. Nevertheless, purchasing Tesla stock at this time could be a wise move. The best course of action for most investors could be to own a reasonable but not overly sizable position in Tesla and then let the multi-decade investment visas play out. If you think investors should hold on to their Tesla shares, let us know below. If you want to know more about what Tesla's been up to over the last few days, the next video on your screen, see you there. Thanks for tuning in. If you enjoyed this content, don't forget to hit that like button. When stock prices